Good morning all and welcome to today's video. So today I have just the one pair on watch, and that is EUR CAD. I've just taken West Texas oil off of watch and I shall briefly touch on why. So just digging down to the lower time frames, I'm just going to touch on why I took this off of watch. It's a specific reason. If you remember yesterday, I had this forecast on the chart. Let's just move these over a second. So I was looking for a structure of this type, of these types. Okay, because on the 15-minute chart we had this. Okay, we had that sharp hook point there, we had the near miss to it, we had what at the time looked like a middle section. Okay, and then I was anticipating this move up to there and a rejection off of there and then a move to the downside. However, there was one key clue for me which gave me the indication that price wasn't going to commit, or wasn't ready to commit rather, was specifically this 4-hour candle here. Okay, so when this 4-hour candle closed like that bullish one, which you can see there, I've seen this more than anything. One of my weaknesses as a trader is that I find it difficult when I'm looking through data. I'm not really a data-driven person. I'm creative in nature, and analytical things don't come that easily to me. Okay, and one of the things that I find difficult is sifting through my data, sifting through my trading documentation, and looking for patterns within data. I'm very good at images and recognizing patterns in numbers. Apparently, I have autistic tendencies. I did a test recently that revealed that, but I don't find identifying patterns in data all that easy. But one of the things that I have discovered, and that does stick out to me like a sore thumb, is that many of my losses historically have involved me trying to get short after a 4-hour close such as this. Okay, and the same is true on the flip side. Okay, so when I see a candle like this, okay, that's a very good indication to me that price isn't ready to commit to the downside, and that it will likely trickle around and perhaps form a larger structure. So something like that, or it will form, we'll get that kind of near miss again, and then we'll form some kind of deeper structure, which kind of makes sense. And maybe we end up with something like that. Okay, or maybe we push up to these highs, and that kind of makes sense. Because what I was saying yesterday is that this is quite a long move down and the market needs to breathe. Okay, so after a big move down, the market needs to breathe. It needs to, if you think of the bow being pulled back on a bow and arrow, the market needs to move sideways, build volume. The bow needs to be pulled back for the next leg to the downside. So I'm not surprised by that, because the correction was quite small relative to the move down. And as I said yesterday, this is an atypical sequence. Okay, so when I see a larger correction like that, this gives me a clue that potentially this move down is a middle section for a move up to potentially break these highs, because we near missed to that high and we near missed to that high. So if that's the case, it wouldn't surprise me if we get a larger correction in the middle. Okay, because middle sections typically are comprised of larger structures, and then perhaps we have something like that. Okay, for the move to the upside, and that would make sense contextually. So that's why I took this off of watch, and immediately after I took this off of watch, I was looking left. Okay, which is one of the things you should do as a trader. If you just look at that 4-hour close, right? If you just look left and show me when we had a 4-hour when a 4-hour candle closed like this, show me when price just plummeted to the downside immediately after. You can see a similar candle here, which is not quite as bullish as this one. Similar candle here, but then price took another 4 hours, okay, before it committed to the downside. So obviously that wasn't ready to commit at that time. And if you just literally just look left, show me when we've had where there's been a move down, where we've had a 4-hour candle. So you have a big bullish one there, and it took 16, 20 hours before it committed to the downside. We have a bullish candle there, which is not as bullish as that one there. Okay, it takes another 4 hours, and then eventually we commit after that. Okay, So you can do this. You can literally just look left. Okay, we have a move down here. I can't find any candles as bullish as this one, but that's probably an indication within itself that price is not ready to commit. So if you just look left, when you see 4-hour candles such as that, they typically, price messes around for quite a long time. And if we just touch on this, we've kind of broken out of, we kind of have this structure now. And we're almost, if we were to move down, retesting the back end of that. So I wouldn't be surprised if we get that. If people think it's a retest, then it does that. And then we get something like that. Who knows? But that wouldn't be ready by the end of the day. So this is another example of just letting the market do its thing. So Euro CAD on the higher time frames. If you're new to my videos, welcome. If you're not, you will have heard me break this down in yesterday's video. But on the higher time frames, let's zoom out, seeing as we have a little bit more time today, seeing as I only have the one pair to break down. Let's zoom right out. Let's do what many traders don't do and zoom right out, okay? So we have this significant low here, okay? We have a very sharp move down followed by a sharp move up. That means a lot of orders were placed in this area in a short period of time, which is why it's sharp. If they were placed there over a longer time frame, then it would have got there more like that, okay? If we just take that off the chart, that gives me a clue that there's likely a lot of liquidity there. Okay, so we come all the way down. So anyone getting short here, especially, a good place for them to be taking profit would be down here. Okay, so you see this taking profit here. Okay, some people would have tried to buy this a little bit too early. They would have been washed out because, as I've said in previous videos, when we on the higher time frames, we typically break below if we're going to rally to the upside, because a lot of the orders will be placed below, because to the bigger players, this represents a high area of value for a buy. We do break just below and then we rocket to the upside, okay? And we mimic, just to touch on it as well, if we just use the bars pattern tool and we replicate the move up last time around where price pulled back, and replicate the move up until when price pulled back sharply, you can see we moved up by about a similar amount before we started to pull back sharply. Okay, you could argue that there was a bit of a sharp pullback here, but the real sharp pullback was there. So price will often move up with a similar level of aggression as it moved moved up last time around. Okay, and even within that, you can see the impulse correction continuation, which is what we typically look for, and that would have confirmed the move. We had the inverse head and shoulders there, left shoulder, head, right shoulder. Typically speaking, the right shoulder equals to or protrudes slightly lower than the left shoulder if we're going to move to the upside, and the same is true, the inverse of that is true on the flip side. Okay, so then we have the psychological patterns again. So I'm satisfied that we don't need to come down to here at this moment in time, because we have already washed out the liquidity that was sat there, and I'm just under the impression at this moment in time that this is a potential impulse correction continuation to take out this high longer term, that this high near miss too. Okay, and if we just measured from there to there, that would take us, as I said yesterday, up into these areas, and then potentially we could be looking for reversals from that area, but because we would have that 1 2 3 and then this kind of 1 2 3 middle section. Okay, but that's super long-term forecasting. So you can see here, what do we have? We have a base, we have a sharp move down followed by a sharp move up. Price near misses to that area. There's the FOMO channel. Okay, people trying to buy it, whilst the orders that are still there and the orders that are being placed in that area drag price down. We tap below, bargain area of value for a buy. We move to the upside. Okay, so we don't necessarily need to come all the way down to here. Okay, so you might be thinking, well, why is price all the way down here? Well, if we just zoom in a little bit, what we do have, we have an exchange of liquidity here. There we have a structure, we have volume. Volume was accumulated there, and the volume that was accumulated caused this big move to the upside, which occurred with very, very few pullbacks. Okay, it was a very direct move. So that gives me a clue that potentially we could be moving down to this consolidation, not all the way down to there because we don't need to, for a potential move to the upside to take out this high, which this high near missed to, and then we would have this kind of reversal structure, okay, that would be parallel, and then that would be the 1, 2, 3 middle section, okay, and then potentially we could be coming down to take out this low because we would have a reversal structure there, okay. So that's the higher time frame picture as I see it, and one of the things that makes me think that is because you can see that although we haven't tapped into that high, we have tapped above here, and we have that impulse correction continuation or potential continuation that we typically look for. And if we measure this impulse here and take it to the break of the correction, and we assume that the continuation leg out of an impulse correction continuation is of a similar length, that would take us just down to here, which, what would that indicate? Bargain area of value for a buy, okay, which would likely potentially take us up. The other clue that for me that is potentially the case is that we've moved out, we've broken below here, and rather than tapping just below and moving to the upside, if we were going to take out this high, which this high near missed to, from there, we would have likely just tapped below and tapped above. We didn't do that. We've spent how many days? 1, 2, 3, 4, 5, 5 days in total. This is the 6th day, consolidating below this low. That gives me a clue that this is just price building volume. Okay, the bow needs to be pulled back on the bow and arrow after a big move like that for the next wave to the downside to take us down to there. And if we were to measure this impulse, okay, and take it to the base, and we assume that the continuation leg is of a similar length out, okay, that would take us down to there as well. If we just measure it to the break of the correction, okay, because sometimes the volume which has been built within these corrections can dictate how far price moves out, and sometimes it moves a bit further because so much volume was built in there. That would take us down to that area as well. So the whole thing kind of ties in, okay. And if we just pattern separate this, structure, so when I've got less pairs on watch, I can obviously go into more detail. So the more detail I can go into, the more of the thought process, which literally takes me a few seconds now to come to me, the more of that I can actually go into. So this is where we have to. This is where I was separating the structures, so we can see that the start of, we have this little tight consolidation there. If I just zoom in, it might be a bit more helpful. We kind of cut. We then have this little bit of liquidity. So this is a separate piece of structure. Okay, we then have a little correction below it. Okay, this high comes up above here, so that gives me a clue that potentially this is part of this structure, whereas this here isn't, because it formed above all of this. Okay, if I just take that off, so you can see that we move down correctively. We have near misses to each high, and then we move up and tap into this high by way of a reversal structure, and we also tap into this little bit of consolidation, which I said was likely part of this, because this high formed above here, therefore rendering this potentially as part of all of this. We tap into that by way of this reversal structure, we move to the downside. Okay, so then we have we then have this, we have this kind of structure here, we have that middle section there, we have this sell off that traps the sellers in too early, okay, but we didn't break above. And if you look ever so closely, I think, yeah, we slightly near missed. Let's get this over here. We slightly near missed to that area. We come back up, trap the wash out the people who tried to sell too early, tag out all their stop losses, we break above, then we move to the downside. Okay, so that gives me a clue that that is a completed piece of structure. And then if we just drill down, you can see that we have this. So we have consolidated below this low. as I said. So that gives me a clue that this is just the market building volume for the next wave to the downside. We have, what do we have again? We have this high. We have a near miss to it. Price near misses to this high. Okay, so what I'm looking for today is the following. The same as I was looking for yesterday. Are we looking for a break above this area of value, followed by a push down, an impulse down on the 1 hour chart, a 15-minute consolidation afterwards, and then I would look to see if I could get a risk entry within the flag on the 5-minute chart. Okay, and then I'll be looking to get short with the first target being this low here. One of the things I like about this is that potentially we have this impulse correction continuation, and if we just measure the legs of that, measure that impulse there, if we were to push up from here, obviously we haven't rejected from there yet, but if we were to, that would take us up to here. Typically speaking, these impulse correction continuations are completed moves. So if they complete at an area of value, that's a good indication we're moving to the downside. A few more little advanced things that I just wanted to touch on as to why I will not be looking for a risk entry from the edge of structure, so I won't be looking to call the top, is because if we just zoom down to the 15-minute chart and we pattern separate these structures, okay, so we have this structure here, okay, I'm just doing this crudely, but we have this structure here which has a 1 2 3 and a 1 2 3 wave middle section. We come down, we hit the 90% rule of this structure, so we have a completed structure there which did not commit to the downside. We hit the base of it. Okay, I'm just going to take that off the chart. We then have this structure, okay? We have this here. We have a 1 2 3. We come down, we hit the 90% rule, the start of the structure, and we don't commit. Okay, so there's always a chance that the more of these that we create, these more structures that we create that don't commit to the downside, that this isn't going to commit to the downside, which means that potentially we could see a break above followed by a correction which then moves to the upside because of these structures which have completed and haven't committed. And the other clue indication, this is why it's important to stay neutral, is we have this low here. Okay, we have a near miss to here, and we also have, and then we tap into it, the low, and we also have a reversal structure in there, okay, which has a middle section within it as well. So there's reasons why, from a technical perspective, why people might be looking to buy this, okay? So that makes it a little bit more risky if I was to try and look to get short here with, say, a 1 hour rejection, or look to get short after a little channel, a break of a little channel like that. Okay, you could be tagged in and tagged out, and then you'd think to yourself, why did that happen? Well, all these little internal structures, which is something that I've been factoring in more recently, I'm still learning just like all of you are. That is one of the things that I've noticed that, make these higher risk. But however, so how do we mitigate that? We mitigate that by way of this push down in the flag. If that happens, if we tap into the area, we move down impulsively, that implies that, that the risk of price moving to the upside has been nullified, because price found enough liquidity here to move it to the downside, and then the correction afterwards would likely be the banks and the bigger players stacking their orders for the next wave to the downside. And that is pretty much the entire thought process, folks. I have an alert set just below the area of value. If that does not trigger, I will not be checking the charts every 5 minutes and looking for effectively a face in the cloud. That's how I often liken trading to. If you stare at the charts for long enough, you will convince yourself that you can see a trade setup which isn't there. So the simplest way to not do that is to set an alert on the chart, and if that alert does not trigger, then leave your charts alone. Okay, so that's what I like to do. I won't be FOMOing into any positions. I hope you've enjoyed this video, folks. I've enjoyed going into a bit more detail than I would otherwise be able to. But for now, have a great day, and I'll speak to you again soon. Thank you very much indeed for watching.